Welcome everyone to Threads of Thought, the future of apparel, organized by Cal Research. This panel discussion aims to provide insight into the apparel sector, and with us we have two distinguished guests that are experts within the industry. Firstly, Mr. Malik, the Chief Growth Officer of MAS Holdings and the Country Head of MAS India, and Mr. Viraj Fernando, CEO of the Private Label Division of Hela Apparel Holding PLC. For our online audience, this panel discussion will be broken into two sections. The first will be where our panelists will give their thoughts and their opinions on the current state of the apparel sector and its outlook. And in the second session, we will have a brief Q&A session, and you can please send your questions to the Capital Alliance account, and we will go through as many as possible during that Q&A session. So without further ado, let's get into our first question. So this is for Mr. Malik. Mr. Malik, do you believe the sector has bottomed out and entered the recovery cycle? If so, how long before demand returns to historic average levels? And if not, when do you expect the recovery to begin?
So, Amrit, first of all, thank you for the invite. I'm happy to be here with Viraj. I think this is an important topic. Sri Lanka depends on apparel export, and I think Hela and MAS and a few other companies, we rely on Sri Lanka being successful. So I think it's a timely one. On bottoming out, I have a few things to say. One thing is, I think the world will never be the same again after we have gone through a pandemic and an economic downturn and everything that's happening in the world right now, whether it's conflicts in regions, whether it's economic and other issues that people are facing. So a few things. One is, I think the world will never be the same again. I believe where we are today is worse than when we were in the pandemic. And it's even worse than 2008, 2009, when the numbers, when you add it up. So that should mean something, even for the audience. Just to repeat that, I feel we are in a situation now that is worse than the pandemic as an industry, because we had a lot of COVID cost, as we call it, whether it was creating centers, exporting the finished product or importing raw material or closure costs, paying additional transportation, all of them. The hike of the shipping and commercial logistics, everything went through the roof. Even during that time, the situation is not as bad as we are seeing it now. So if it's as bad as that, and if I also bring in 2008 and 9, I think then we are in a significant downturn at this point. So a few things. One thing is, I think in the West, we are all overexposed to the West. I think whether it's Hela, Brandix, MAS, Hydromony, all the guys in Colombo, we not only have operations in Sri Lanka, we have multiple operations around the world, but overall exposure is still way to the West. And if you look at West as a market, whether it's US or Europe or UK in particular, if you call up your friends today in the UK, they'll tell you that the situation isn't so great. So you don't need to do a lot of research. You just talk to a few people who live there, you know what the current state is. Interest rates are high. Job creation, the US says they are creating jobs, but not at a certain rate. It's at a low rate. So the people who are losing jobs are losing it at higher pay grades, but the jobs that are created are at low pay grades. Cost of borrowing has gone through the roof, so which means there is no discretionary expenditure. They don't have extra money in their pocket. In the first year after the pandemic, there was a lot of stimulus. So those have now run out. No free money in the system. So all this means that the industry will never be the same again for us. At the same time, with a little bit of demand there is in the market, all of the manufacturers are now scrambling to get a piece of that pie. And that means people are undercutting each other on price. And then there's a new price ceiling that's getting set. So anything that on what we call a cut make price in the apparel industry, there's a term. If there is a $1, today we may be getting that same order for 80 cents. And somebody else might undercut Sri Lanka for 65 cents, for instance, just to pay their overhead. So then it becomes a buyer's market. That means the customer, the brand, can now demand this new price, and they can get it from wherever they want. The moment this price is set, that becomes a new price for as we go forward. So that is one. But having said that, there are some brands. Lululemon, is a famous brand that everybody knows. They are still growing quarter on quarter. For the last, I think, 20 quarters, they have not had a bad quarter. If you take brands like Uniqlo, for instance, they are heavy on the east. Now they're growing in the west. And with this new growth, even in a bad market, there's growth year on year. So that is also happening. So it's not all doom and gloom. Some of the older brands, I saw the Gap numbers, Athleta, Old Navy, very bad. But then some of these other new brands are going global. So Uniqlo, being a Japanese brand, may have been strong in the east. Now they're going to the west and they are creating new markets. And that is creating some momentum. So it's not doom and gloom. And then there are new brands. So there's a brand that we are interested in working with called Wori, Wuori. It's in the west coast of the United States, growing faster than any other brand, and it is look and feel like Lululemon. So while some of the older traditional brands are struggling, some of the newer brands and new markets are opening up. So it's not doom and gloom. If you take Asia is there still growth. China, not growing as fast as they would like, but there's still growth. India is growing. Their GDP is growing. There's urbanization. There are people coming into the cities. The middle class is growing. So what happened in China 20 years ago is now happening in India. So this would mean that in the future, we should create new markets or new opportunities out of these. So it's always, there is a plus and minus to everything that's happened. Coming closer to home, the Sri Lankan industry has declined for sure. We were barely touching 5.5 billion. We have been in that mark for a couple of years now. And this year looks like we'll be 4.5 billion. We are almost losing $1 billion worth of top line as a country. First of all, I think Sri Lanka should not be just 5 billion. We should be 8. That was the JAF, I think the Apparel Forum's target. But we are still struggling to get to 8. Whereas people like countries like Bangladesh were behind us 20 years ago, and today they are $45-50 billion. So even as a country and a government, there is more that we can do. But I think from a Sri Lanka point of view, we are losing $1 billion. I think there is more that we can do from labor reforms, ease of doing business, and things like that. And I think I'll stop at the last one, is the perception on Sri Lanka. I think we went through COVID, then we saw a spike in 2022, the customers wanted more capacity, and then we all got ready for that. And then our economic downturn and the domestic issues we had has created a perception in the buyer's mind. So I think sometimes perceptions take time to heal. So I think that part is very, very important. I will stop there, Viraj, and want to add something to it.
Thank you, Mr. Malik, for a very comprehensive and clear answer. Moving on to the next question, Mr. Viraj. This question relates to sort of the fact that a lot of apparel and textile manufacturers are moving to emerging markets. So my question would be, what sort of competitive advantage do Sri Lankan apparel and textile firms receive by expanding their presence in Africa or other emerging markets?
Okay. So I'll talk specifically about both the points. If I talk about Africa per se, and leave the emerging markets to be Indonesia, Cambodia, Thailand, this part, where the industry has predominantly exited as well, all throughout. Africa, for us, as you know, from a Hela standpoint, we embarked on that journey 2015, 2016, 7-8 years ago. And working with the customers and working through that continent, what we've noticed is that there are, for me, there are two schools of thoughts, right? There is this set of customers. The industry feels that even the next generation of apparel still be these emerging markets of the Indonesias, the Bangladesh, or China, and the East Asian countries. The other school of thought is primarily saying that the next generation of apparel will be in Africa. And simply because of the fact that some brands have already expanded their footprint. They have their offices, they have the supply chain fully established in the countries that they are already working in. So coming from that and going into Africa, what we've seen is that, the countries that I talk about, the countries where Hela is present today, which is Kenya, Ethiopia, and Egypt. These are countries, the primary reason that as Sri Lankan exporters, the reason behind is that the countries that we are in have free trade agreements to the US and Europe, and many other countries as well, right? So if you take, for example, the EPA agreements for Europe from all the African countries, the AGOA primarily focusing on for US and QIZ especially from Egypt to the US, have been major factors that has encouraged us to go there, right? And then in terms of labor, right? So all these countries have 50 to 100 million itself as a population. In terms of that, the infrastructure that is again available in the countries for you to expand into the business. Also the fact of, in terms of the proximity, right? For example, from Egypt to the Europe, it's about 2 weeks maximum in terms of sailing, or even by air, and to the US, because you cut down a lot of travel that as opposed to shipping out of Sri Lanka to the Europe, to the US. So things like that, and also in terms of the infrastructure developments, and I'll talk to you about, I think Malik mentioned about as a country, as Sri Lanka, what we see in some of the countries that we operate in Africa is that the amount of infrastructure that comes in, the support from the governments to make the ease of business. I take a classic example of Kenya. The shipments pretty much comes from one major port, that's Mombasa, to many of the countries, and some countries which are even landlocked. And the time of clearance from Mombasa into, for example, Nairobi, if at 2015 it took 2 weeks, today it's just 3 days. There's a railway that the government has put where the clearance can happen from Nairobi instead of the port. The government is talking about bringing in and extending the railway line into the park where today Hela and MAS all operate as well. So when that happens, it could be just in 2 days from the port, you can unload your goods in the zone itself, right? So those are some of the things that from a country aspect, the infrastructure development that we have seen in the countries that we operate in Africa. And then on top of it, I would also touch upon the fact that what have we done as supply chain partners? So it's all about not just manufacturing, right? To continue this industry, it's not just putting up a factory and getting a labor and getting a cut and sew product out of it. It's about building supply chains, right? So if you take the work of Hela over the past few years, we've developed supply chains. We've gone into a country that had very minimum amount of apparel exposure. Today, we buy fabric from Tanzania. There's elastic, packaging, printing, heat seals, you name any and every item that is needed to make an apparel product is available within that vicinity, and we've done that, done the whole environment around supply chain being built there. And with that, we've been able to, if you take Hela, for example, been able to achieve the largest vendor, the exporter out of Kenya to the US. That status across any industry, right? So that's a great status that we've been able to achieve simply because of the fact that you are enabling an ecosystem for supply chain to take place, right? So with this, this has set up a platform for new vendors as well to come on board into Africa, because once you have the infrastructure set up, the supply chain set up, it's pretty much a plug and play. Right? So I see this as the reasons and the benefits for us to be there.
Thank you so much, Viraj. And you made it very clear as to what the benefits Sri Lankan firms get from kind of shifting towards Africa or those emerging countries. Moving on, Mr. Malik. So the next question is for you. So just based on the current order book visibility, you'll have the current raw material prices, the cost of utilities and other overheads. How do you plan on either sustaining margins or more favorably increasing margins in current conditions?
So Amrit, I think in the previous segment I mentioned about price undercut, and there's a new price point that has been created in the market, and we don't see the retail prices dropping just because there is FOB prices of manufacturing dropping. So they have in the retail markets, they are either holding their retail price or increasing the retail because there is inflation in the retail also. Coming back close to our home and Sri Lanka, I mentioned that we were 5.5 billion. Looks like we'll lose 1 billion this year. Getting back that 5.5 itself is a task. So first of all, margins, yes, we need to maintain margins or gain margins. But first of all, we have to maintain our status quo. We have 350,000 people who are dependent on this industry. In the last 6 months or 18 months, we have seen that even this has got diminished a little more. There has been consolidation of capacity, unfortunate closure of 1 or 2 of the factories. The smaller ones struggled early because some of the partnered capacity that the big players use had to be the first ones that got hurt during this whole thing. So the industry has also contracted. If we have to go back from 4.5 to 5.5, for instance, there has to be some capacity that needs to be created. And that is your first step. So try to get back to the 5.5. And getting back to the 5.5, I think we can't throw people at it. There has to be some kind of automation, some kind of other means of creating that capacity, unlock of the capability. So I think that is one. We mentioned about the FOB being challenged. So a good part of the FOB is also raw material. And if we are to make margins, not just the top line, but to truly make a margin, ideally we should be in control of our supply chain and raw material. I think Viraj spoke about that earlier. So what does that mean? So number one is, as a country, as a government, as an industry, we have to attract some supply chain partners to this island. So we do have some supply chain partners, some raw material, cotton, synthetic, and some trims, elastics we do have. But is that sufficient? I think we still buy over 50% of countries' need from the Far East. I think as a company, we buy maybe 50% in Sri Lanka and another 50 from the Far East. I'm sure that's the same at Hela. I'm sure at Brandix, Hydromoney, the big players will still have that issue. So the first thing is, how do we bring raw material close to home so that we have the margin of supply chain lead time, also price, and also then it may unlock some GSP plus. If you have raw material in the region and you ship to Europe, you get some benefit. So I think there are some fundamentals that we have to do as a country, as a government, as an industry, to make sure that we are still competitive. Bangladesh went from 15 billion to 40 billion in less than 10 years. And there is growth for us also. Having said that, if you look at like for like, China, the overhead or the cost of an employee is over $1,000, whereas Sri Lanka is just $150, $200, all inclusive. So which means like for like, for employee to cost of labor, we should be technically more attractive. If you take where the dollar is today at say 320, 340 in the next year, whatever that fluctuation, we should be attractive. So then why aren't we able to attract and bring more business? It's a good question. So I think supply chain is one. Speed from where we are, we are not near shore. We are not near to Europe. We are not near to US. We are not near to China. So that becomes an issue. Some of these brands that were spoken of earlier, there's a reason for why you buy from Africa to US for duty free, or Jordan to US, it's duty free. Some of our customers buy from Haiti, from MAS, close to mainland in the US, it's duty free and it's also fast. So we have to tick some of these boxes. And if we don't, then we have to give some other other benefits so that we attract the brands here. So it's a mixed bag. There are some closer to home benefits. India, for instance. India is a huge market, 1.4 billion people, fastest growing GDP. China was going through this kind of cycle 25 years ago. Their domestic market started going through the roof. So which means that domestic manufacturers need not export. The Chinese manufacturers just can produce for China and still be in business. So what does that mean for us? We can't be meaningful players in China. It's very hard for a Sri Lankan company to go and be meaningful in China, but we can be meaningful in India, for instance. So how do we organize ourselves in Sri Lanka to deal with the India consumer demand or the urbanization or the middle class growth? And it happens state by state. We talk about India as a country, but if you take Delhi or Mumbai or Madras or Chennai or all of these, we have to look at those cities also as markets. That's how China dealt with it. So I think the price point is different. Two things about India, for instance, it's not only about the India brand for India. We have Tatas and Reliances and the local Aditya Birlas. All these brands have their own stores. So I'm not only talking about those brands, I'm also talking about the international brands who have presence in India. Speedo, Nike, Adidas, Reebok, Puma, all these guys are also in India. So you have to try to see with your past experience and past relationships with these brands, how do you become a meaningful player in Sri Lanka or India? So that's another way to look at it. India is also opening up for export. So there are multiple ways of how to skin this cat in this region. But there's a stumbling block. India has a quota for Sri Lankan product that we ship to India. There's a limitation. They have given us 8 million pieces of apparel, socks, or knitted gloves. All of these included, only 8 million pieces. It's nothing. So we are currently lobbying. We are talking to our Sri Lankan government and to our counterparts in India. The JAF is proposing that the 8 million piece quota be taken off or give us some alternate solutions so that we can use Sri Lankan capacity and ship apparel to India. So I think in the next 12 months, we'll see some changes here. If that happens, Sri Lanka has some special skill, for instance, bras or some technical product or some fitted garments that we may be much better than producing it in Sri Lanka and shipping to India. If we can get that done, definitely our top line of 4.5 billion. If not for the West, we can still do something about it in the East. But we need to work on this quota matter with India. So I think top line growth, we have to get back to 5.5 as a country. We are still at 4.5. So we must make sure we don't lose any market share any further. Then as a government, we have to see what incentives we give the apparel industry to attract investments from textile mills and raw material suppliers to this country. Third is maybe some labor reforms that we are talking about. And fourth is working with the Indian government on the quota and a few things that I just mentioned. So I think we still have hope with India as a key market close to us.
All right, thank you so much, Mr. Malik. So just for the audience, for the online audience, just bear with us for a moment till we get our camera sorted. But I'll move on to the next question to Mr. Viraj. So this is in terms of for the apparel investor, for anyone interested in this sector, what are the sort of macro indicators that you are watching in these key regions such as the US, Europe, and the UK, that you believe may signal a turnaround in this industry?
So I'll just start with macro indicators are other ones that we actually need to really monitor to see where the trend is happening and where the world is going in terms of the apparel, right? And mainly because of the lagging effect that it has from a consumer reacting to a product in a store to an order that gets manufactured, which we technically call in terms as effect, right? So the few things I'm sure any industry would be considering, which I'll talk about a few here. I'll start with the first point in terms of interest rates. So interest rates definitely becomes a key factor because the moment for any country or any economy, right, the higher your interest rates are, you reduce your consumer spending, which has a complete direct impact in your order book. We've seen over the last close to about a year or a year plus that both US and the EU markets having very high interest rates, which has heavily impacted some of the consumer demands that we've seen. We've seen some light at the end of the tunnel in terms of the US as we see the interest rates in US keep coming down, which we have seen in certain parts of some of the customers that we work in US as well, where we see some of the order books getting back to the to a better state, but nowhere close to the pre-pandemic state that we have been in. And then, whilst this has been primarily in the US, for EU, it has still not been the case, since across the EU, we've still seen the interest rates being very. The second point I would like to highlight is in terms of the inflation rates. Right? So again, when the inflation is extremely high, the inability for a consumer to spend on items becomes a key factor, and when that happens, people will always try to move into the key products and services that they have to depend on, and making another the second part. Right. So we've seen this been affecting some of the high street brands, whilst some of the supermarkets and some of the other large scale companies and retailers might have even benefited of the economic situation as such. Also, as third point, I'll touch upon the unemployment rates. Again, reduction in the unemployment rates directly affects the consumer demand. And then we see how this all content affects us in terms of the order books that we have, right? Real wages, for the first time we saw this year, April, the real wages increases in the US, which probably is one of the key parameters for us to see that the consumer spending in the US might be coming this Christmas and post, which should help us to the book in the next months to come. Housing, the housing market is another key indicator for us to be watch out, because generally the demand for the housing and the consumer's ability to spend on housing shows the positive trend in the marketplace, through which we can make a direct contact to say that, you know, what's that demand is going to be like in terms of the apparel industry. Stock market for sure is also another key element for since if the companies in that countries of US and Europe, if they are doing well, we could see the result of that coming out in the stock markets, and based on all these assumptions, we can make certain assumptions as to what the macroeconomic situations would be in these regions, and to see how demand and supply equations based on that.
Thank you so much, Mr. Viraj. So I've already received a few questions from the audience. I'd also like to remind the online audience that please send your questions to the Capital Alliance account, and we will try to go through as many of them as possible.
Amit, I have two things on the macro. I think we were talking about this before the session. Next year, the world is seeing 42 elections across the planet. I think that's a significant one. And I think it's touching about 1/3 of the global population. So I think something to watch. Apart from the tensions in different regions, the tension in the Middle East is actually frightening. And we don't want another war. We don't want, you know, the kind of human rights violations that's happening there. But also there is tension in the East. We'll say China, Taiwan, for instance. We can't afford to have such a tension, and especially these two countries are extremely important for the trade of industry that we are in, textile, apparel, and the supply chain and so on. So I think one to watch for macro is next year's elections. I'm thinking by the second half of next year, Viraj mentioned about the interest rates. I feel that the interest rates will come down a little, and maybe the ability to borrow will be a little better. So I think let's hope, we are keeping our fingers crossed that by third, fourth quarter of next year, the buying will be a little better than we are seeing today.
Very true. So just one question I received, which I think Mr. Viraj, you touched on this, and it's regarding the lead times that Sri Lankan firms benefit by shifting into African countries.
Yeah.
So the question is regarding whether the lead time and the corresponding benefit that consumers get, is that the main reason that Sri Lankan firms are shifting to Africa, or is it also the cost, or is it a combination of both? I believe you touched on this, but if you could briefly.
Sure. So it's a combination of everything, right? So as I said, if you take today, Sri Lanka is not duty free to the entire world. We are only duty free via GSP plus to the European region. So one reason, the biggest advantage for us in terms of Africa is that you take the Africa, the different parts of the countries that we operate, if you put together, we are globally duty free. So that is one. Then in terms of labor, the availability and cost is one. And on top of it, topping up with it is the fact of the lead time. Because, and I must also say that to make the benefit of the lead time, it's important that you develop the supply chain. If you are to bring in all your materials into Africa by sea, produce it and then send it out by again by sea to the US and European or any other destination that you're operating, then you might not be the most competitive solution that you can provide to a brand from there. So the moment you have developed your supply chain and manufacturing that can happen in Africa, the fact that Africa is more closer to Europe and also closer to the US, we can definitely take the advantage of that. The advantage of especially the sailing the times and the availability of commercial vessels and airlines to transfer our goods. You can make Africa a very comprehensive and an attractive destination.
Understood.
So I think landed duty paid, right? So what do the customers buy from us? The brands buy a landed price, not a FOB price or CIF or whatever. That is one. How much is it landed duty paid? If they buy a synthetic T-shirt from Sri Lanka, US has to pay something like 28 to 30% duty. So if they can buy it closer to the mainland without that paying the 30%, and you're also getting 10 days of benefit, which means they can buy late, they can watch the market, then the obvious choice is that would be the case. So I think Sri Lankan companies, it's not that we are going overseas today. We have been, in maize, for instance, is in 9 different countries, but producing for different markets with different benefits, including lead time and this landed duty paid benefit for that very reason, to balance our portfolio. So that, our customer we serve from Sri Lanka is asking for a solution from Kenya. We need to also manage that and give them that, so that they still consider us in Sri Lanka as a partner then. Right. If you don't give them those solutions, they might say, okay, I'd rather find somebody else who's giving me a global solution. So I think the entrepreneurs here have to manage that angle also.
Also, I've received another question, and this question regards the recent the protests that we've seen in Bangladesh regards to the apparel workers. So the question goes on to state, so Bangladesh increased the average wage for apparel workers considerably due to the aforementioned protests. How do you see this play for Sri Lanka from a textile and apparel point of view? Do you see this as a major, the fact that their wages have gone up, their costs will go up? Do you see this as a main competitive, favorable factor for Sri Lanka? How, and if so, how big of an impact do you think it would be for us?
Yes. So I think it will be, it should be. If we don't make it a favorable, it's somebody else's loss and it should be our gain. So if we don't capitalize on this, shame on us. And they will then now increase their minimum wages, and then I think we will be very meaningful players from a cost, like for like, overheads included. The second thing is, with this issue that happened recently, the customers will also quickly do some soul searching. They will say, okay, are we overexposed to this country? What's our risk? I know a couple of brands who are more than 50% of their global buy is from Bangladesh. Now that is scary for them, right? So they'll quickly want to make some adjustments. We should be now geared to accommodate some of those Bangladesh exits. So that means we have to be able to give the right price, right lead time, have a supply chain that we all spoke of now. But we shouldn't miss this. I think we missed the China exits. We didn't capitalize as much as we would have liked. So I think in this round of customer managing their portfolio, we should get some.
Right.
Definitely, Malik. I think to Sri Lanka, because there's if you compete on a empty open playground, Bangladesh is duty free to Europe. Sri Lanka is duty free, and both Bangladesh and Sri Lanka is not duty free to the US, right? So to the capitalizing on that, the exits out of Bangladesh, I honestly feel that at least the European part of this, we should be able to capitalize it without much trouble. And we do have the resources in this country, right? We have the industry, we have the capability to grab it. We should make the most out of it, and even take some of the other benefits or potential market share that we can grab from there into the other countries, at least that we operate in, and ensure that Sri Lanka as a country, whether it's manufactured in Sri Lanka or through a Sri Lankan company in any of our multi-country origin countries, we benefit that as a country.
Very true. So just I'd like to ask a follow-up question on something both of you mentioned. Mr. Malik, you mentioned that how countries that were sort of overexposed to Bangladesh will now be looking at their strategy and trying to diversify where they get their apparel from. And you also touched on how on the China Plus One, that theme where we saw a lot of customers, a lot of clients kind of wanting to diversify out of China. So it's a sort of follow-up question that I present to you both. Do you see the China Plus One? You both mentioned that we sort of missed that benefit. Do you feel that? So in terms of the clients we have been talking to, they are still saying that clients they don't want to source cotton from China, or they are also kind of pulling out of China. Do you think that even though we missed that initial kind of China Plus One, that run, so to speak, do you feel that it's not? Do you feel it's too late for us in terms of to gain any sort of benefit from the China Plus One movement? And do you feel that when from a global perspective, companies sort of want to diversify where they're getting their apparel from, do you feel that Sri Lanka has a strong case to garner more demand from those kind of customers?
So I think a few things. One is the Sri Lankan government and the China government have been quite close in many ways. And I don't think we have capitalized that for apparel textile. We haven't got any specific advantages of that relationship. So that's one. So we don't have access to export to China. So that is as a consumer market. From China exits, did we benefit? Maybe not as much as we discussed earlier. But will the brand stop producing in China? I have a strong feeling not. You cannot afford not to go to China for two reasons. One is their domestic market is so big that these brands need to still serve them as a China for China, or it's meaningful enough that they cannot exit. So maybe they won't grow for their exports out of China like they used to in the past. If they were growing, we'll say 10% year on year shipping from China to US, maybe the imports into the US from China may have reduced, but not gone away for a few reasons. One is China gives you the supply chain, all of the raw material. It's all, you walk down a street, you can find everything under, down one street. We cannot offer that here. So that will always be a disadvantage for us. Second thing is, if you tell our guys to do a sample or a remake of a sample, we'll take 7, 12, 10, 14 days, whatever. Whereas they'll do it in 48 hours.
We have to wait for the raw material to come from China.
So we will always be on the back foot. So I think China is the global production location and won't go away. their domestic market is growing, so they'll always be strong, even for local, and I mean China for export. But I think, yeah, we should try to see how we can capitalize on the China one, but definitely not miss out on the Bangladesh.
Just moving on to another question. So we all know that the apparel market has been rather subdued over the last few quarters, I would say. But the question goes on to ask is, in terms of the orders you all are receiving, have the order sizes reduced due to this weaker demand, or have the frequency of orders been impacted at all?
Viraj, you want to take it?
Yeah, maybe sure. So, that's something that we've seen as well. The impact on the global economy. I think there's multiple reasons behind it. I would say the fact that there are multi brands that keep always entering into the marketplace, right? So it's not compared to a few years ago, where one particular brand would have held a very competitive space for a product category. It's extremely a different marketplace today. Right? There's so many things, including social media, including the macro economic and environmental factors. There's so many things that's affecting a brand's ability to retain that key status anymore. And as a result, and also in terms of the consumer interest, the trends, and all that, it changes drastically. So 10 years ago, if you saw an average order quantity to be, let's say, 100,000 units, today it would have come down to about 10,000 units, for example, simply because of all these variables in play, right? So the places, simple concepts in terms of the dual gender. We're talking about so many different aspects today. It's not brick and mortar itself anymore, right? We've been into so many omni-channels of retailing where the brands sell. The advertising is so different. There's so much of it's not just direct advertising. It's through influencing, through social media. The entire scope of the apparel and the fashion industry is a different platform altogether. Couple that with the economic downtrend that we have, it'll always be, at least from where I'm coming from, we see a reduction in terms of the average order quantities, due to all these reasons that I mentioned.
Yeah. So I think there are a few things I'll touch on. Maybe one or two things that was not spoken is how often they buy. So in the past, our brand is to give us a forecast 9 months ahead, and then they'll send us a PO 3 months ahead, and these get sold 6 months later. There's no way in this market condition that a brand can predict what is being bought in market 6 months from today. So that means they are buying blind. What you call it, buying blind, and they're just thumb in there and trying to figure out what the demand would be. And there's no way that if they see a color or a style moving, to chase it and buy late and to buy on time. So they used to buy more. That's traditionally what they did. And then they carry this huge work in progress in the factories, and they carry a huge stock or inventory in the stores and in their distribution centers. If you take large brands, I know a sportswear brand that if you take their quarterly statement, they have $9 billion worth of inventory. How many companies on the planet can take $9 billion worth of inventory? That doesn't get sold at full price. So what happens is this stock will stay, then they will slash it by 30%, slash it by 40%, and then at the end they'll try to recover some money because they need the cash flow to go and buy again. So this is a vicious cycle. So they can't buy early anymore. And what they're doing is trying to buy as and when they can. So all our teams that are used to this very steady every Friday or every last day of the month or whatever buys are all gone. We'll have to now deal with the bullwhip effect of what was spoken by Viraj, saying the customer will try to survive in market, buy late as much as possible, sell at full price as much as possible, carry as less inventory. That means that burden will then get pushed down to us to manage. So that means all the forecasting, digital, AI, staging has to be managed. So that will put more burden on us, but it's in our favor or our interest to make sure we make them successful. If we don't make the brand successful, they won't buy from us. So it's a vicious cycle that we have to manage. So the industry is not going to get easier, it's only going to get tougher.
I've got another question. So this is regarding the GSP benefit that we get compared to what the GSP benefit Bangladesh gets. So it starts off with a statement. So it goes on to say Bangladesh is getting GSP benefits only for producing the garment in Bangladesh, but Sri Lanka manufacturers have to both manufacture and source around 90% of their raw materials from the region to get the same benefit. The question is, are there any discussions to get the same benefit that Bangladesh is getting for Sri Lanka as well?
I think two things. One is, first of all, we are in risk of even losing our GSP plus. Yeah. So first we have to somehow manage that, figure out how to not lose it.
Yeah.
So I think there are, that's a loaded question. I think we have to tick a couple of ILO conventions. There are one or two that are still questioned. So that is one. The second thing is, I think the status that Bangladesh is claiming, they are claiming a certain status, so their GSP is going to last for longer. Now, for us, having to buy raw material in the region, and whether that's like for like to Bangladesh, I don't think there'll be a change in that. So the first priority is to secure our GSP plus and not lose it.
And the fact that the GSP plus regime, it's not a difficult one. It's only somewhere between 8 to 10% of material that has to be that you can manage from outside and ensure that the rest of the material is from any of the countries in the SAARC or any country that it is eligible with GSP plus, which opens quite a lot of doors for us, and we have been operating in that environment. And I think, as Malik said, we can always try to look at whether the grass is always green on the other side, but what can we do with what we have and maintain and sustain that? I think there's enough and more opportunity for us as a country to do that.
Thank you very much, both of you. There's another question. What is stopping us from opening up sampling capacity through development centers in China to offer a quick turnaround on sampling? And that would, I suppose, help us capture some of that China plus one, or rather capture demand in China, etc.
Sure. Good question. The sense that some of us are already doing it, I believe already. I know in some of the businesses within Hela, we've done that. This is primarily because of the fact that I think for the benefit of the wider audience, it's primarily for the benefit of the fact that of the availability of the supply chain. I think Malik mentioned quite a bit. We wait for us just as the importance of executing of an order, the executing of product development, design to development piece. How much can we cut that down? How can we be faster in terms of responding to the market needs that are ever changing? Becomes a key parameter for us to, as a country and as companies, to win business. And in winning this, what we've seen is that majority of if we are still dependent on the Far East for raw material, and if those materials cannot be easily duplicated in Sri Lanka or in any of the Asian countries that we operate, then the other question we need to ask is, can we at least do certain things like sampling, testing, product development out of the Far East, so that we cut down that lead time and then directly send our samples from China or any other location into our customers' offices, so that we can expedite the entire product development process.
I think, Viraj, that's correct. So I think lots of companies, Sri Lankan companies, have either an office in Hong Kong or some presence in mainland China for this reason of getting quick turn in developments or getting trims and things that we can't get here. But having said that, you can do the sample out of China, you can use the technology in China, but you should be able to replicate somewhere in the world when it becomes bulk. So you have to consider that while doing that.
Okay. Moving on to a technology-related question. So in the current world with AI and data analytics playing such a big part, how has technology impacted both Hela and MAS? And what sort of efficiency gains could we see coming out of the use of technology?
So I think this industry traditionally has thousands of people, right? So you go to China, the factory size is 10, 15, 20,000 people. In Sri Lanka, roughly 1,000 to 3,000 is like our sweet spot in Sri Lanka. But it is clear you can't keep throwing people at this. And if you go to China, half of their products are becoming no-sew because it's automated, bonded, no stitching. So it's going down that path. And when you do no-sew, that means, and when you're doing it with technology, that means you can go to a mainland. For instance, manufacturing can go back to US someday because you don't need 1,000 people to do the garments. It can be done by the same amount, can be done by 100. And if you go to a more expensive country, the payback on automation is also faster. For instance, I said China is $1,000 employee versus 200 in Sri Lanka. The payback on replacing the China manufacturing worker with automation is better.
Right.
So then automation will then take this industry back to where those countries came from. Sewing came from UK, sewing came from North Carolina to China. It can go back to these countries, and so automation has its benefits. Standardization, when you automate, the garment will look, 100 garments will look absolutely the same, quality will be good. So I think productivity wise, I think Sri Lanka can do better on automation. At these price points, the margin or the break even is, we'll say if a short was produced at 50% efficiency and we made money, now the break even may be 65%. So to do that, I think automation would be a crucial aspect, not to, or rather to consider.
Okay. Just moving on to another question that we received. So this, with regards to as we all know, there's been huge migration of talent out of Sri Lanka. How is that affecting the apparel industry? So right now, since demand is a little subdued, it might not play a huge impact now, but if the recovery cycle were to kick off and demand would return to kind of those usual levels, how big of impact does that brain drain sort of impact the apparel sector?
I think, again, a very interesting question. I think for me, it's at times like this that you need the best talent, because sometimes, when, right now in the apparel sector, it's a tough from in terms of a market situation. So this is where we need the best in class people in terms of creating opportunities, to creating value, right? In terms of whether for us, in terms of a country, how do we create value to the country, and how do we create value to our companies, and how do we create value to the brands that we all service for, right? To do that is what we need the talent. And what we've seen is I think every industry across our country, we've seen the migration of labor, and especially that talented one. And it's we have two types of workforce in the apparel industry, and I'm particularly referring to the executive cadres who are running more technical functions, because that is where we find it very difficult, because to develop this skill, it takes years. We have come and developed people across being many years being in the industry and as companies, and there's no shortcuts, because some of these experiences have to come through your from exposure and about the number of years that you have been working for. So that is a big challenge, and I don't think it's anything to do with whether we have a softness in the market. For me, this is the time that we need to really focus and still retain the best in talent people, which is a big question mark in the country. And as companies, as apparel companies, I believe we've done it to a great extent, right? We've created opportunities, we've created a platform for people to perform, and then that is one of the reasons why we have been able to sustain the best talent still within our companies and within the country, which I think lies in the hands of the leadership of the companies and also in the country to ensure that we continue for future.
There is one thing in the last 20 years. So the current brain drain has a lot to do with what happened in the country and a lack of confidence. And anybody who is young, smart, and believes they want to take a chance, we are losing. I think we were talking about, the best of the best people, we are losing. So it's not a numbers game. It's not how many people you have, it's the quality of the management or, the executive. But traditionally also Sri Lanka has been like a training ground. Sri Lanka, whether it's branding, Ahamadeen, Hela, all these companies, we keep losing people to Bangladesh, to Vietnam, to Middle East. They go, and our industry specialists, technicians are considered best in class. So we have always had a name for them. It has just got worse now in the last 2 years with the current situation. So we can't afford this right now. We want our best people to be here and taking us through these turbulent times, not for them to get up and go look for greener pastures. But you can't blame them.
Just since it's almost 4 o'clock, I'll ask one more question, represent both of you all. And it's just in terms of the ESG side of things, how big or how important is ESG for apparel companies? Are clients kind of demanding that you all be put more focus on ESG? And in terms of the tangible, maybe cost saving or tangible benefits, you all see what are they? What are those sort of tangible benefits you all receive by focusing a bit more on ESG and being more green?
So I think Sri Lanka as a country has always done the right thing. Even before there were standards, before customers came and told us, most of the top 6 or 8 companies in Sri Lanka have been almost benchmarked, and 2 or 3 of those have been global benchmarks. So some of the companies in Sri Lanka. So I think as an industry, as a culture, we do the right thing. It's always been there. So then it became standards. Then it became, you have to be LEEDs certified and this and that. I think we ticked all those boxes. But still, we are only $4.5 billion, right? So doing the right thing hasn't given us another penny more. Whereas Bangladesh, from where they are to where they were to where they are today, $40-50 billion, they have not always done the right thing. But now you can see that if you look at the number of LEED Gold and LEED Platinum, we only Sri Lanka has 2 or 3. Bangladesh has 100 LEED Silver and Gold factories. So that means even that is now out of the window. It's no longer a benefit. They are no longer very special. We still do things very genuinely and well, but lots of other guys have also caught up with us. So that is no longer a complete advantage for Sri Lanka. Bangladesh is, they can say they have 100 LEEDs Gold factories. So then that would put Sri Lanka in the shade.
Thank you very much, both of you. Those are all the questions we have time for our online audience. We received so many questions, and we do apologize we couldn't run through all of them, but we tried to answer as many as possible. This session is recorded and it will be uploaded to Cal's YouTube channel shortly. So you can always rewatch or watch what you missed on that channel. Once again, thank you, Mr. Viraj. Thank you, Mr. Malik, for joining us and having this session. It was very insightful, and I'm sure our online audience learned a lot about the apparel sector and gained very useful insight on the sector. Thanks to both of you all.
Thank you.
Thank you so much. Thank you everyone for joining in. And please watch the Cal's YouTube video on this session if you missed anything. Thank you very much.
Thank you.
Thank you.